makers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Diplomatic efforts intensify in efforts to prevent the Israel-Hamas from widening, while President Joe Biden signals full backing for Israel, but fails to win over Arab leaders. UK Prime Minister Rishi Sunak is the latest in a line of global leaders to arrive in Israel for talks. Britain's Foreign Secretary James Cleverly heads to Egypt. Plus, Tesla misses estimates as Elon Musk dials back growth expectations. Meanwhile, Netflix posts its best quarter for subscriber growth in years. We'll bring you, of course, some of the pre-market moves in just a moment. Now, let's take a look at the European markets map. Of course, a lot of the focus is on diplomacy in the Middle East, whether the conflict between Hamas and Israel has the potential to escalate or whether there's a ramp down from here. Certainly in terms of humanitarian aid, we remain extremely focused on what happens next. The UK, you can see the FTSE down some 1%, the CAC 40 also down 1%. The mood is a little bit of a wait and see. Some analysts saying that actually President Biden not only did not achieve what he wanted, but could have made a lot of people upset, which has tensions to escalate. Rising Treasury yields and also weak earnings news sapped a lot of the appetite for some of these stocks that were being bought only yesterday. Again, traders trying to track this intensifying diplomatic push to contain the Israel-Hamas war for the moment do not know where it goes. You can see the U.S. 10-year yield 4.9663. So the UK Prime Minister Rishi Sunak is the latest world leader to arrive in Israel. Now, he's making a two-day visit as part of a global effort to prevent the Israel-Hamas war spilling into the wider region. Well, Sunak's visit comes after the U.S. President Joe Biden signaled full backing for Israel.
We're going to make sure we have what you need to protect your people, to defend your nation. For decades, we've ensured Israel's qualitative military edge. And later this week, I'm going to ask the United States Congress for an unprecedented support package for Israel's defense.
Well, Joe Biden also tried to calm concerns about the deepening humanitarian crisis in Gaza. Let's get straight to Bloomberg's Oliver Crook, who's in Tel Aviv. So, Oliver, to what extent has the Biden visit actually made a difference?
Yeah, Francine, you make a lot of the important points here. And the thing that he's able to do from Tel Aviv, which was lend support to Israel, which is what he has been doing since the very beginning, and really every U.S. official that has come over here to Tel Aviv to speak, but also the second question of deterrence, saying that, there's a very clear and simple policy for the United States in terms of backing Israel, in terms of deterring other actors, and it's don't. And he repeated that in his speech. He repeated it 3 times. The more difficult questions, that is what remains unanswered from his visit, right? There was supposed to be a diplomatic leg of this, and then there's, of course, the critical question of aid. We are now entering the 13th day of this conflict. Aid is still sitting there, literally hundreds of tons of aid sitting on the border with Gaza and Egypt at the Rafah crossing. The conditions are not yet in place for that aid to cross over. There have been positive sounds from the Israelis, positive sounds from the Egyptians, but it has not been confirmed yet. That aid is not yet moving. And overnight, there was also a UN resolution put forward to have a sort of selective kind of ceasefire and pause in some of the hostilities, but it was vetoed by the United States because that resolution did not have a clause in it that was supportive of Israeli defense.
So, Ollie, Rishi Sunak, the UK Prime Minister, also the latest leader today to arrive. What can we expect from him?
Listen, if Biden was, there were a ton of things that Biden was unable to achieve. I suspect it's going to be the same thing for Rishi Sunak. And I think that the sort of unachieved question is a major one here, right? So there's the question of aid, which we talked about, but also diplomacy. Biden was not able to go to Jordan. He was not able to meet with the president of Egypt, El-Sisi. He was not able to meet with the king of Jordan, Abdullah, nor the president of the Palestinian Authority, Mahmoud Abbas. That was all on the docket and was completely reconfigured after that blast at the hospital. The one thing that I think was interesting that we took away from Biden's speech was his reference to 9/11, where he said that basically in the wake of 9/11, the U.S. sought justice and they made mistakes in doing it. And he said to the Israelis, and this is sort of a concern, a warning to the Israelis, that in trying to dismantle Hamas, which is their stated objective, they need to be very clear on what their objectives are, and they need to make sure and evaluate and question themselves as they go down that path. Are they going down the path that will actually lead to those objectives?
Oliver, thank you so much. Oliver Crook there in Tel Aviv. Of course, we'll see what the day brings in terms of diplomacy. Now, joining us for the latest on geopolitics, but also on markets, Elisabeth Braw, Senior Fellow at the American Enterprise Institute, and Maya Bhandari, Global Head of Multi-Asset at BNP Paribas Asset Management. So thank you both for joining us. Elisabeth, we had a very, very tough 2 weeks, and certainly the humanitarian aid is something that a lot of people are calling for, but it seems much harder to achieve than expected even 10 days ago. What do you think President Biden achieved on his visit?
It seems that he may have achieved a bit of moderation on the Israeli side, but of course we will only know whether that's the case when he is back in Washington and this war continues. But that's really the maximum that any American president can achieve. Israel is America's strongest or closest ally in the region. America, conversely, is Israel's strongest backer, and if not even America can convince the Israeli government to proceed with caution in this war, then it seems likely that nobody can. So the next few hours are absolutely decisive, and of course we'll see more lives lost if the current course is continued.
Elisabeth, what's the potential of this conflict escalating? I know we'll talk with Maya about, of course, the price of oil, inflation, the economy. It seems very secondary to everything that we're witnessing in the Middle East. Does this escalate? Does this broaden? Or again, does it stay like this?
Well, already at the moment, there is a big risk of it escalating. We are seeing Hezbollah weighing in and Israel saying, don't you dare to join this conflict. And that's why the U.S. has 2 aircraft carriers in the region now, essentially to tell Hezbollah not to get involved. But already we are seeing various governments and indeed global markets concerned. And we should remember that if Israel decides to retaliate against Iran, which is Hamas's protective power, if Israel decides to retaliate against Iran, then Iran can decide to take revenge. And I think the most likely way in which Iran would take revenge would be to target shipping in the Strait of Hormuz, because it's something that Iran can easily do. It's not a kinetic action, it's not involving military force. It's just harassing shipping, and that would have major consequences, not just for those ships, but for global shipping and indeed the global supply of oil.
Maya, when you look at this, and again, it's extremely difficult because it's a very tense situation. President Biden's trip to Tel Aviv really signaled his full backing for Israel, but another key goal that we thought he was going to try to achieve was winning over Arab leaders. So given he hasn't achieved that, what's the potential for escalation or for tensions staying and continuing?
Yeah, so Francine, I think what's happening in the Middle East is frankly an enormous humanitarian tragedy, and our hopes are that we can arrive at some sort of solution. But I'm afraid I must stop there in my comments on the unfolding crisis.
But does it actually hurt? I mean, again, we don't know the impact on inflation. We don't know the impact of oil, because if there is widening conflict, this could send, and I've seen in certain research, oil at 150. You don't actually know what the consequences for policies are.
I think it's frankly too soon. There are too many unknowns to really have any asset class, so asset market implications from this. I mean, I think we've certainly seen tensions in the Middle East oil asset markets last week and again this week. But as you alluded to, I mean, I think for us it's the humanitarian tragedy that's really front of mind at the moment.
Of course, and it is for everyone. Elisabeth, when you look at, again, what happens next, is there anyone that can try and mediate this? So is it China? Is it someone else that can try and bring the tensions a little bit lower, safeguard some of the civilians, but also make sure that this doesn't escalate into something much bigger?
There isn't really, and it's extraordinary. China is seen as the world's second most important power today. But when a crisis occurs, such as this one, or indeed other recent crises that have occurred, nobody looks to China. China just doesn't have that sort of standing and that sort of credibility. So we still look to the US to try to solve or at least soothe whatever crises occur, including this one. And traditional mediating countries like Norway, unfortunately, there's little they can achieve this time. But we should remember that now, with Biden not having been able to meet with Arab leaders, there will be a feeling in the Arab world that they are not being heard, and not just among Arab leaders, but among the public in those countries. And so that is a really volatile situation. And we should remember that the situation at home in our countries is volatile too. There are very vocal blocks of citizens supporting either Israel or the Palestinian side, and there seems to be very little in the middle. So this situation can become even tense even in our countries.
Thank you both, Maya Bhandari, Elisabeth Braw. Of course, both stay with us. More on markets, more on geopolitics next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now let's get straight back to Maya Bhandari from BNP Paribas Asset Management. Maya, when you look at all of the uncertainty, that's never good for the economy. When you look at tensions across the world, it seems that geopolitics could be the main uncertainty and possibly driver for the world economy.
Yeah, I mean, I think geopolitics are certainly one of the factors that are a driver of real economies across the piece. But I think when we look actually at the US, for example, or Europe, we actually judge the risks to growth, if you will, to be actually quite firmly to the downside. So, you know, I think if we look at the U.S. As an example, I mean, we know why growth has been so much stronger this year, despite that monetary tightening that has come through. It's really been down to support a fiscal policy and excess savings being spent. All of these effects, if you will, are to our minds fading, and of course the volatility that we've seen in markets, those tighter financial conditions that have resulted from the geopolitics, but also from broader market moves, if you will, accentuates the downside. For us.
Maya, there's this word that scares everyone, but actually it's also quite difficult to define, like stagflation. Could we see, because of renewed concern, energy prices going higher from here, but financial conditions also starting to hurt labor markets?
Yes. So, I mean, I think broadly, I mean, even before the crisis, something we had noticed was, gasoline prices in the U.S. had not really moved lower to recouple with oil or to recouple with break-evens. And as we know, that's an area of particular sensitivity in the U.S. But I think, Francine, broadly, for the inflation picture in the U.S., the growth picture is more than just oil prices, as you reflected, is the labor market as well. And there, certainly on a forward-looking basis, we are seeing quite a lot of signs of cooling coming through. And, wage growth broadly at the moment is around 3.5 when you put all of the various wage data together, and that's consistent with inflation around target for the Fed. And so,
how does inflation? And I've had some conversations in Marrakesh at the IMF World Bank, and it was unclear whether we're lulled into a false sense of security because inflation comes down and then actually goes back up quite aggressively towards the end of the year. Again, if you look at the models, are we looking at this as one of the biggest concerns that could lead to a policy mistake?
Well, I mean, I think, if we did have a meaningful and sustained rise in oil prices, then yes, that would alter the dynamics. That is not what we currently expect more broadly for commodities. And so I would say that, on the fundamental side, we see downside risks to the growth outlook, and you could point to some of the geopolitical tensions at the moment adding to those downside risks. And from a valuation perspective, Francine, there are really quite quite meaningful dislocations, and the biggest dislocation to our mind is between bonds and equities, and bond premia are reflecting a very different scenario to equity premia at the moment, and that's where we are deploying our risk, being long of duration and adding as yields rise.
Every day we come in, we look at the 10-year Treasury yield, and you go, what happened? If you look at where it's now, and I think we'll have it on screen in just a second, I think it was 4.9 or close to that. 5% is like a big psychological level, right? What is that symptomatic of?
Well, I mean, I think it's symptomatic to our minds of I think what we've had for much of this year, which is enormous narrative volatility, essentially. So we've had a couple of stronger U.S. data prints. We've had the geopolitical crisis unfolding in the Middle East, and I think those two factors have combined to lead yields higher. But we don't expect it to last. And so for us, our biggest risk positions are in duration, but really in real yields. So if you will, protecting a little bit against a more inflationary outcome, to your earlier question.
And you're expecting basically this policy tightening cycle to be almost complete. Does it make a difference if there's another 25 basis points here or there? I'm thinking about the UK, where certainly markets repriced a bit of the tightening expectation yesterday. Yeah,
and yesterday on the UK was interesting because what drove the UK inflation print higher and surprise to the upside was the same factor that led to the downside surprise the previous month, which is hotels and accommodation, essentially. So in the UK, I think we're seeing the impact of tighter policy feeding through much more acutely, particularly to the housing market, for reasons certainly sitting in the UK we all know and understand. A much faster transmission, much more downside to growth, and as with the US, we think the labour market is and developments on the ground are broadly consistent with trend inflation. So the UK is perhaps an area where you could see more rate cuts than expected coming through next year. And so the focus for us at BNP PAM is more on what happens to the trajectory of policy next year. In other words, do we get some of those cuts that have been priced out in the last few months or not? And I think the case for those cuts is perhaps stronger in the UK than it is elsewhere.
Maya, as always, thank you so much for joining us. Maya Bhandari, there, head of global multi-asset at BNP Paribas Asset Management, will be, of course, looking more at some of the Treasury yields and quirks. Coming up, Tesla chief executive Elon Musk is dialing back expectations for the car maker as high rates continue to bite. We'll break down the results next, and this is Bloomberg. Tesla is falling in pre-market trade after posting a miss on profits, a miss on sales and margins. Now, third quarter EPS, earnings per share, came in at 66 cents below the street's estimates. The chief executive, Elon Musk, is dialing back expectations as years of rapid expansion collide with rising interest rates.
I apologize if I'm perhaps more paranoid than I should be, because that might also be the case, because I have PTSD from 2009, big time.
Now, Bloomberg's Alex Webb is here with all of the details. Alex, good morning. So you're a bit of an expert when it comes to all things technology, all things cars, and all things Elon Musk. So what stood out?
Three things. So firstly, the numbers themselves, not very good. The reasons for that are kind of well telegraphed, namely higher interest rates means that it's higher to buy vehicles on financing. That's not a problem that's unique to Tesla, but where Tesla has just massively expanded its production capacity globally, it kind of needs to fill it. Secondly, those comments we just heard from Elon Musk were pretty remarkable. It's not often, this is characteristic of Elon, not often you hear executives make those sort of comments. Of course, 2009 was a bit different. It looked like Tesla and SpaceX might go under. Eventually, he managed to pull them both through. There is no suggestion right now that Tesla is going to go under. But the third thing were his comments around the Cybertruck, that actually he talked about the difficulty they've had in bringing it to market. He said, we dug our own grave with Cybertruck. The inference of that is a little bit tricky for investors because there has been some criticism of Tesla being slow to refresh its model lineup. Now, if it has trouble doing that, that also isn't terribly good news for the market.
So from driving to streaming, Netflix is actually doing really well. They're seeing an upside and they're hiking prices.
Yeah, so what we've seen with Netflix is they've really tried to crack down on people sharing their accounts while not paying extra. So sort of thing where you might share your password with your parents who live 100 miles away, for argument's sake. That is something that Tesla is making a lot harder. You have to... Netflix is making...
You also can share Tesla.
I can share, but I'm not sure I can send it self-drivingly to my parents 100 miles away. No, the Netflix password sharing, asking people to pay more, that seems to have been pretty successful so far. That gives them scope to increase the pricing on the individual accounts as well. So a certain amount of optimism coming out of those earnings.
Alex, thank you so much for a terrific briefing, as always. Alex Webb there with the very latest on Tesla and Netflix. Coming up, the UK Prime Minister Rishi Sunak arrives in Israel for talks. We examine the dynamic between Britain and the Middle East in our Bloomberg UK show. That's just ahead, and this is Bloomberg.